Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
$900 million shares. What the actual? It's been a rough week. Let's just start there. I saw Dane's stream on Tuesday. He went through it pretty well, I think. But yeah, you know, disappointed. We didn't even we did consider it, but we didn't even think that they would dilute this much, you know. So and it's not even 900 million shares. It's even more if you add other participants there and everyone do the entire offering. It's going to be like 2 billion shares or something like that. So that was a heavy delusion that we didn't really believe that they would do, because it would be pretty devastating for all the shareholders, which it has, of course. And yeah, just we got it wrong on that one in terms of the dilution number. We always talked about that the dilution was a risk, but I didn't believe it would be at this level. And now you are kind of forced to participate in the offering, the rights offering, which is fine. You know, if you have the money and you still believe in the company, you can play it that way and maybe wait it out a bit, and maybe you can gain back a little bit of the loss. But that was a heavy loss overnight. So I'm just gonna be fully transparent now. I've sold my position in BNED now, but my strategy is to wait and see where it will end up trading, and if it gets cheap, I have to reassess and think about maybe going in again so I can participate in the rights offering. Because, you know, the balance sheet and everything now looks much better, and they kind of did what we hoped for, just not in the way that we hoped they would do it by any means. So that's I'm out right now. I did sell. I took the loss, and I put it into ALTO actually, because ALTO is down today as well. So I averaged down on ALTO, but the plan is to, if BNED gets, you know, in the low teens or something like that, before the date of the rights offering where you have to execute, I will pay attention closely and maybe move the money back into it. But I will let you guys know how I'm going to play that. And even then, you know, you need to believe that they will continue to generate the cash flow with the model. And you do have that DOE thing hanging over. I don't think, like we have said on the stream, I don't think that's going to be necessarily a big issue, but there's so many possibilities now that you need to consider, and the fact that the model will not generate as much money that we hope it will is of course there. And after all of this, I need to be like really sure before I jump back in, I think. But that's just full disclosure. I sold it today, and I put it into ALTO and averaged down a bit. But that's my strategy and thinking moving a bit forward. And who knows? You might as well also just, if you sold out. I've been thinking also about just leaving it and see where it goes after the offering, and see where the stock price stabilizes, and maybe jump in again if you just track it and watch the development with the first day complete model and everything, and maybe it still moves a bit under the radar, and then you can get a spike up in the end here, you know. But yeah, there's a ton of options and routes this can take. Right now I'm out. I'm checking I'm checking the situation closely, and that's how it is. And I've been speaking with Dane today, and he gave me permission to say that he also sold his position today, and is kind of waiting in the same way that I am. And he will talk himself more about it on Saturday, I'm sure. But he also pays close attention, and will move quickly if he sees an opportunity that he believes in again. And I can speak for myself about why I sold, because you kind of have to, you kind of forced to participate in the rights offering, which was at 5 cents, and I don't have the funds to do that right now. I struggle to figure a way how to raise cash to participate fully, and maybe even more, in that right offering. And of course, the thesis in terms of upside and stuff like that has taken a big hit after this massive dilution. I've never seen any dilution like this before. Are you kidding me? 2 billion shares? What the hell is yeah. I'm empty for words. I did not believe that they would do it in that way. Of course, we talked about a dilution all the time, and I thought it would be like a mix of things, maybe, and a dilution included in that, but not this heavy and with that kind of discount, even though they said it though. So they didn't say it, but they said like it would be a substantial discount potentially and all that stuff. I didn't think it would be that many shares. Either way, I have been thinking and reflecting a lot of the whole thesis and the thinking and the research and everything. And looking back, there's some stuff that I'm gonna take away and learn from, and hopefully I will not do those mistakes again. I will call it mistakes, because we obviously lost money here, or I took a loss at least. And I think looking back, when I ignored my stop loss was the first big mistake, where I should probably have not done that and get stop lost out of it. It's so easy to sit here and say it now, but I think it's also important that you do reflect on everything you did to maybe learn and become better. And you know, if this has worked out, I would sit there and be happy and think that I was doing everything right, and maybe take the same kind of risk again, do the same, like build a large position, average down, ignore the stop loss, because it worked. And that could be even more dangerous with a even larger position for me. So you need to think about it and reflect about it in both ways. And maybe this experience can prevent me from being burnt big time in the future. This was big time for me. I said it all the way. It was a big position for me, so I'm not happy with it, and I'm so disappointed that they spent all this time for this kind of deal, because yeah, it screwed us, screwed all the current shareholders for sure. But we are paying still attention. I never like to lose, so I want to get the money back. And you know, maybe there's still a route to where you can at least make the results a bit better in the end. But yeah, the big thing for me looking back is I ignored that stop loss. If I got stop lossed out and just tracked the situation and followed it, could follow it even as closely as we did. I probably wouldn't though, because when I'm out, I focus on other stuff. But I could, and I would get all the big updates, the necessary updates, I think. And then you know, maybe jump in at this stage where it's much cheaper than what my average was. So yeah, I think that's the biggest one. And I think I look very, my decision looked very stupid by selling out of GTE also, who is almost reached a double from my average, to put it into BNED. And that was too hasty, and I shouldn't have done that looking in hindsight now. That is annoying. And you know, I did it because I didn't have the cash again to put into BNED, and I really, of course, you have seen that we really thought that it would work out. So selling out of GT, another mistake, to raise like capital for BNED, and that was a stupid decision. That was a bit hasty, I think, and I missed out like pretty much 2 times on a decision like that. So when I'm in a ticker that I believe in, I think I will not sell out again until something drastic has happened with the thesis, which it didn't. It hadn't done that on GTE at that time. So yeah, lots of things that you can look back at as being wrong, and a lot of things to take with you moving forward. But we will move forward, and at least like we so far we live up a bit to the name Laughing Stock, you know. So but no, it's unfortunate. I think this I wouldn't imagine that heavy of a delusion. Value Hunter, I see you in the chat here. Thanks for tuning in, by the way, everyone. My broker doesn't support being able to participate in the offering. I'm also out, keeping an eye on it as well. Yeah. I think maybe I would be in the same situation as you. I have not had time to check with my broker, but I have a feeling that I would struggle to participate, or like do a lot of paperwork or stuff like that for them to participate for me on my behalf. So it gets a bit complicated for foreign investors, I think, Value. So that was another factor that I was aware of in my decision of selling out. So I think we have been thinking much similar there, Value. It'd be good to look at the IMR ticker. They'll be a 50% owner in BNED at 5 cents and could be another way to get exposure in BNED benefits. Yes. They will come out of this pretty good, and it's definitely a ticker that is on the radar now, and also a way to play it, to try to not be like, what was it, 65% down or whatever it was, you know. And yeah, I think there will be multiple ways to play this moving forward. But I'm not going to sit here and say that I will. I'm going to say that I'm tracking and paying close attention to it. But I think for me, the right move now was to sell out completely, take the loss and move on. And I think that's what we plan to do here right now. And that's I'm gonna do a lot of research on other tickers today, like we always do. We always do that, but we will still follow BNED closely. You know, the ticker is in the tracker sheet and the watch list today, so we will definitely keep an eye on it. Hey Max, nice to see you tune in, Max. I saw you had some questions for Dane. Good questions, and I think Dane also wrote like a good answer. And I thought I should just go through the answer because it's he did a lot of calculations to explain the situation. So I have it here. I'm just gonna read it. Like Max was asking, like the calculated share price in the future, and Dane was writing like this. Well, it's going to be tough to say, but if we do a rough estimate for now, I would see it like this. Assuming stock price is around 20 to 25 cents and you buy into the rights offering, you will get your share after dilution, assuming for warrants converted around 6 cents a share. If you bought around 70 cents before, then your cost basis would be more around 9 a share. Enterprise value would be equal to new shares outstanding, which I get at 2.633 billion. And he says like, what a ridiculous number. Would be 293 million, market cap 2.6 billion times 0.6 cents plus net debt and cash at 135 equals 293 million. If you divide EV by share count, there you can get 11 cents a share. So it could be a double in your initial investment there. Hint, hint, MMR granted reverse split at 17, keep it to the original number of shares measurement to 1 would be 155 million shares, and at a price of 11 cents a share, stock price would be 187 a share. If they grow earnings and assume EBITDA could get to even 50 million by next year, thinking of the refinance situation on the ABL, I could see this working out. DOE not affecting the business materially, but after this dilution, and if your cost basis was around 70 cents, then you are only up 20%. If you get in lower and let's say 20 cents, then you're up substantially more, around a double. But even 20% if you can take part in the rights offering is better than taking the 60% loss. This obviously is assuming all kinds of variables, and you should always do your own due diligence. If the business does any worse than expected, there could be even further loss as the business still needs to prove profitability. Please let me know if you have any question about and then he says like Johnny will talk more tonight on the stream. So yeah, here we are. That was his answer for some rough calculations and stuff. And I was like saying a little bit similar now. There will probably be opportunities to play this still, and it's just a matter now for me to sit and wait and try to find some way to play this to try to minimize the loss, I think. But I might also just sit out completely and move on and learn from it, but try to forget the pain it caused, because it was a big hit for this portfolio, this one. So yeah, what are you guys thinking, Max and Value? I saw you were on Dane's streams as well, so it's yeah, been a rough week, and did of course not go as we hoped for, but we knew the risk. We knew the risk, and we were also saying that we are prepared that this can go wrong, and unfortunately it did go wrong. But I think the worst thing you can do is to just lay down and stop, because then you will never succeed at this, then at least. So I'm gonna keep trying, and we're gonna continue to do the streams, and hopefully we can grow both the portfolio and the stream, and also as investors, you know. But yeah, we need to focus on other tickers. And for me personally, like I said, I put the remaining money into ALTO, and I still have belief in ALTO for 2024 and further and beyond. So that's what I did with this right now. But again, I might take that money out of ALTO again and spend it on BNED or other tickers. I will let you guys know. I'm always open with my positions. But that means that right now I only own one stock. So I'm all in on ALTO right now. Which is not what I want, but I want to have more stocks in there. But let's see how it goes with ALTO also. So just wanted to start with the dashboard here, and we can move on. And if you have some questions about BNED, just let me know. I will try to answer the dashboard here, and we can move. But I think Dane said a lot about BNED on Tuesday, and I've said kind of what I want to say now. And we will talk more about it on Saturday as well. So yeah, I'm not gonna spend more time right now on BNED on this stream. It is what it is, and I'm completely out at the moment, but following closely on this stream. It is. But here's the dashboard, and I see Canopy is up 20% again. So I saw that there was some news on Canopy about there was some, what was it? This one. Get a boost Thursday amid news that the National Conference of State Legislatures sent a letter to Congress urging that the bipartisan Safer Banking Act be attached to the Federal Aviation Administration reauthorization bill to help speed passage. So there's some development in some political issues there. Again, that sends the price up for Canopy. Been a bit of a roller coaster, that one so far, but if you look at the chart, it looks pretty good actually. In like, if you bought here, you are probably happy right now, and also in a short amount of time. And you saw the pullback and now up again. So not a stock that I'm usually dealing in, but interesting to follow all the price action there. I saw Bitcoin Trust is a bit up, Manpower, Tesla down. Is Tesla getting cheap? I don't know. It has been down for a while actually, so yeah, potentially cheap. It's hard to say though. It's hard to value Tesla, but I think if you get down to around $100 like it got here, it is interesting there, I think. But also not a stock that I'm usually in. Manpower, so Manpower was up. You know, just up and down, moving sideways in general. So yeah, the rest here is there's not many big moves today. Cotton is the only one that lights up here in commodities. In the industries, shipping and environment service. I saw rig was almost down enough to trigger my conditional formatting. Has been a bit rough for rig the last weeks. And you see it shipping as well. I think this is just Maersk, not an ETF or anything, just like a big shipping company. And yeah, the rest is like just a normal, not much happening, I think. I see that my sheet needs some updates. I will try to fix these soon enough. There's a lot of stuff going on right now. I don't have too much time fixing the sheets, but I'm trying to do the research. Max is saying I put a limit order on 25 cents. If it doesn't get triggered, then I go sell. Market. Sorry, the icon is blocking the text. That's why I'm struggling a bit here. Let me check if I can. If it doesn't get triggered, then I go sell market the next days. Yeah, yeah, I get you, Max. It's of course from the channel always no investment advice here, and you need to do your own decisions and due diligence. But like I said, I'm out, so I share your thinking about selling out at these levels and wait and see the situation. So I don't blame you for that thinking at all. No advice though, like always. I just saw in this article once again with courage and conviction. There's a lot of people now doing similar calculations than what Dane did. And there's some discussions about if people think this will end up being successful in the end or not. And of course now you get a lot of these people that say I told you so and stuff like that, which they have the right to do. But it's it got very bearish here, so but it's worth reading through it. A lot of this makes sense, and it's fair enough. The bear side got this one right. We are wrong so far, at least in terms of the price action. The balance sheet now looks much better. They have control of that debt so far, and they could move in the right direction from here as well. So, which was kind of the thesis. We just didn't think that the dilution would be that heavy. So, yeah, Max is saying better buy than Tesla. Then, yeah. One question: how do you screen with Y sheets? You got a ticker list with your filter by price, or how do you screen? Max, do you mean the screener function in Y sheets? I'm not sure if I understand your question 100%, but I think you refer to the like the screener function here, right? Let me know if that's the one or if you mean something else. And you know, Courage is still here and saying that he sold a little bit of his position and will use that cash to buy in the rights offering. So there's a lot of people that are still involved that we have followed all the way. So still worth paying attention to the article. I mean, your daily movers, okay. So this one, and you ask like, how do you screen with Y sheets? You got a ticker list which you filter by price, or how do you screen? Yes, and that's what I've said in the past here. I'm in the process also now, because of Y sheets. They have a new function. They have this screener function, and you can do like what can you do? You can do like yeah, here, this one, get list, and then you can just erase all of these stuff. And keep the exchange. Like this, and you can add all the US exchanges, and if you want to filter by market cap and stuff, you can keep this. And then you can make, if you put the get data, generate a whole database of tickers to you. And that's what I'm trying to do, but so far Y sheets is struggling a bit to add all the tickers on all the exchanges, so I'm just waiting for them a little bit now. But I'm using alternative lists with a lot of tickers, yes, right now, and I have pulled them through Y sheets, but also combine it with other things. So I have like kind of generated my own universe, if you want to call it that, with tickers, and from that sheet I pull it into here, the daily movers, and it's based on the daily move. And for my filter, it's like a 7% move up or down. So Max, since today I'm a customer from Y-Sheets also, and I thought there are two ways. One is to use slits with tickers or go with their screener. Yes. And I'm in contact with Guillermo, who is the founder of Y-Sheets, and he has told me that they will look into the issue they have with that some tickers are missing, and fix it. And actually, Guillermo will be on one of our streams soon, where he will talk about how he created Y-Sheets and how to be how his journey has been as an entrepreneur. So I'm looking forward to that stream, because I spoke with him on off the stream just 2 days ago something, and very interested guy. He had a lot to say about his journey in to create Y-Sheets, and I was very interested to see how we used it for our stock research. So I think that will be a good stream, and I think maybe it will come soon, maybe even on the weekend, but we might not be able to get it on the weekend, but a bit later. But let's see how it goes. So Max, if you are interested then to ask him questions directly, you can tune in and yeah, I'm sure he will answer some questions. How big is your universe, and do you have international stocks in international stocks? Yeah, well, we need to separate the sheets a bit, because it's from the US exchanges only, and I also filter through market cap, so I don't get the super small ones. I don't have a filter on the upside. Sorry for everyone. I think I have some internet connections, but I'm just checking now if my stream still works. Maybe I should try to X out on the daily movers if it's might be a bit heavy. Sorry about that. I'm just needing to check if everything works here now. Are we back? I'm not sure if we're back. Well, I will continue and see if this works. And I forgot where. Yeah, in in the daily movers, there are from the US exchanges, but in my fundamental sheets, you don't actually need a universe to pull stuff in, because you have everything in Y-Sheets. If you just type in any ticker here, they have a lot, and they have the whole universe here. And if you contact them on Discord, if there's a ticker that you can't find, they will add it for you pretty quickly too. I've actually done that a few times, and they got on the case and added it very quickly. So that was good, But in terms of the daily movers, I have created my own universe with different sources, and I've just gathered all the information that I can, and through different formulas and stuff. So I created it on my own. But I have a way in Y-Sheets now with the screener function, when they can fix all the tickers there, I will build it out in a much more efficient way. I apologize for the stream being so poor quality now. I've tried to exit a lot of the things here to... I think it's my internet connection and not my computer. But either way, I'll just continue, and I hope it's not too bad. It got on the case and added it very quick. In Y sheets, they have also the Roaring Kitty sheet. Yes, they do. They have a version of it, and they have other templates as well that you can just download for free as a customer and use. And I talked with Guillermo about it on Tuesday, and he said that the templates they had there was very popular amongst their customers. So I downloaded a few of them, and I have seen the value they bring. So yeah, you can definitely get some templates from inside of Y sheets. So I think it's a good product, and I think he spent a lot of time building the templates as well. So they are well done, you know. I will just pause the stream a little bit and try to fix my connection to see if that will improve the quality here. Give me a few seconds. Sorry about that. I'm not sure if I can fix it. It looks a bit ugly right now, but oh, it seems like the stream is working again, I think. Oh, seems like the stream. Yeah, I think it fixed itself. It was an OBS issue because OBS just restarted itself or disconnected and connected again. So yeah, who the hell knows? I'm glad it looks like it works again. So let me know if I can continue then. But I'm here in AOSL. They sell a lot of computer parts and stuff like that. They trade 1% to the 52-week low and has been up to $35 and are now trading at 20. They have had some share buybacks at least the last year, but it's not a lot, and I'm not sure if these are like warrants or stuff and then they just exercise them, and now it's like on 28 million again. They have a little bit of debt, but they come across as safe here, and they have 156 million in excess cash. It seems to me like they've had a poor year in 23, which was natural for a lot of the semiconductor companies, right? Quality seems good from here. Thanks, Value. I think it works again now, but yeah, I apologize for that. I have no idea how what happened. But let's keep it simple now. I'm just using the fundamental sheets for now, and We'll try to go through the tickers I have. But yeah, this seems like an awful year for them. Look at the operating cash flow, free cash flow even worse, net cash flow negative. They have some kind of stupid dividend here, and earnings is also negative this year. And of course, if you take the last 3 years here, look at the earnings in 21 after Corona. Something has obviously happened here where they kind of got a jump in their business, and I assume it was the pandemic. But maybe even something else, because these are very improved numbers. So I don't know what happened here. I don't really want to look into it, that exact thing right now. What interests me is that we might have an opportunity in this one because of this last poor year. And you see it trades below book. And I mean, if this can turn the cash generation around to what it was in 2022, I'm talking operating cash flow, because look here, the free cash flow is still negative. So obviously they are using a lot in capex, which could be good depending on, you know, if you spend a lot in capex, it can give you results in the future. So that's something you need to check into. Let's just scroll down here and see what their operating expenses are. You can see a little bit down, but pretty steady now, and has even stabilized in the last 3 years, where they have jumped in revenue a bit. But you see revenue is quite down this year, or I mean last year. But they don't need to worry about the debt or anything like that. So now working again. Thanks, Max. Thanks. Apologies for that stuff. Maybe OBS had an issue here, or it was simply my internet connection. But retained earnings has grown all this time, and you know, debt free. And they do trade close to the lows. How's the insiders here? Who owns this? 20% insider ownership. That's something I want to look into. Oh, where are you? Here. Oh yeah, so this Mike Chang guy owns 15%, and the rest goes up to 18% then. So this is the guy that is the majority owner of all the insiders. So founder and executive chairman. So I don't know who this guy is. But he is the majority owner of all the insiders then. You see him here, other owners. Let's see if we recognize anyone. No, I don't. So, well, I do recognize them, but not anyone that I usually pay attention to. But 15% from the founder. That's noteworthy. Look at the margins. They have improved quite a lot by here also. Let's check Seeking Alpha. Maybe there's some news on what is going on here. Oh, very few comments, but some articles though. They are talking about the cycle and how the environment is tough, right? Seems like there's been some in the past overreaction on our earnings report. So You usually see that, right? And that's what creates opportunities. But I must say, look at these numbers in terms of the cash generation here. It's not good compared to the other numbers. So maybe they've had a really disappointed year. So Alpha and Omega Semiconductor has put together a strong rally since hitting a new low in November, but there are a number of reasons why the time for caution has come. A competitor, considered bellwether of the analog semiconductor market, have various things to say, which do not bode well for AOSL in the near term. There are several points to note when looking at charts, which suggest a bottom could be in, although it is too soon to say for sure. And he's talking about a bottom, and the stock price is down 25% since he wrote this article. So that's obviously not correct. Well, maybe this is a bottom. You can see it's testing again here around 20, almost 3 times if you include this one. So there's definitely like a little bit of a bottom trend here. But who knows? With this one, you need to see a turnaround in terms of these numbers, right? And look at the earnings also took a massive hit this year. But retained earnings is up though, and on an average, 3-year average, it's still pretty solid. And what is the article talking about? Has staged a strong rebound since they took in November. Stock has rallied, but has it though? Where's November? Here. It went from 20 to 28. Not exactly like a strong and confident pullback or rebound. But okay, it's something. Rally, but in more recent days, the rally has stalled. The stock finds itself between 2 opposing trend lines. So this guy is more on the technical side. I think I'm just going to move on that one. I don't want to add it to the tracker because of the industry that it's in. It's a bit uncertain, right? I don't like to see these numbers and the decline in revenue also. Let me just check the margins. You see the margin is substantially down in the last year as well, which is why you get these numbers. But no debt. They have cash, so maybe they can do something. To me, it just seems like after the pandemic, this is not going the right way. And I think you can see a reflection of that in the chart. Not that this is a uncommon chart. You always have this big spike, right after pandemic, and then slowly down. But you know, it's at the bottom here, and if this takes it out, who knows where it's gonna stop. And in that regard, it could be worth tracking it, because if you can get back to these numbers, it's attractive. But I just don't see it right now enough to put it together with the stuff that I'm tracking, you know. So I'm gonna just skip this one and move to ADNT. So this is an Irish-based company. ADNT designs, develops, and manufactures and markets a range of seating system and components for passenger cars, commercial vehicles, and light trucks. The company's seating solutions include frames, mechanisms, foams, head restraints, armrests, and trim covers. It serves automotive original equipment manufactured in Americas, including North America and South America, Europe, Middle East, and Africa, and Asia Pacific. The company was incorporated in 2016 and is based in Dublin, Ireland. So first thing, I'm not sure if my numbers are correct because it's a foreign company or a Irish company. So take that into consideration, but I think I will go through it anyways. Trades 1% towards the 52-week low, which is something I tend to like, right? It does show up as levered, and it has some depth here. It has paid it down a little bit in the last, actually a lot since the pandemic. But look at these sales though. They probably sold some assets to pay down the debt. That's my guess by looking at the numbers. But then they had a big purchase here, almost eight bucks per share in acquisition, and they have not gotten rid of the dividend. Pretty good numbers here though in terms of cash generation. $7 in operating cash flow and $4.50 in free cash flow. The book value, it trades around book value right now, and you know, tangible book is way lower, but you can also see historically has. I'm sure, like, if you look at, keep in mind this is pretty young company, but I don't really see like a big growth story here either, you know. If you just look at these numbers that we have available here, I don't really see the equity growth or anything like that. And they have spent some cash. I'm not sure. Maybe it looks like they have bought back some shares. They've obviously done this acquisition, but also this sale. I'm guessing it's to maintain the debt. Short term is 144, which they can cover easily with the cash they have on hand. I'm not sure if you can. We have them on the SEC webpage, so we can go through the balance sheet here. Or maybe not. Yeah, here they are. So yeah, a lot of cash, a lot in inventory. They own property and plants, a lot of goodwill. That's what we saw on the tangible book versus the book value. No problem with the short-term debt. Long-term is a bit steep, but like I said, they are paying it down. So retain earnings negative. It's interesting, but it's a bit messy, I think. Who are the owners here, and are people writing about it on Seeking? Man Group. What a name. No, I don't see any like noteworthy owners. I saw our oil fund again is in this one, but they are in everything. And how's the chart? Well, in the last month, it looks a bit ugly, right? And it's like we saw, it's at the 52-week lows now. So similar to the other chart actually that we just saw. If this breaks down below, it could drop substantially lower, I think. I'm just struggling to see. You have this terrible net cash flow though. But maybe it's like the outlook of the industry or something like that is a bad news. It's a 6% short interest. Let's see here if anyone is writing about it. Positive internal trends point to a potential near-term multi-year bottom. ADNT product demand strength in global automotive sales bolster future growth. It's a bit older article. Let's just read the bullet points and see if we can understand why this is moving in the wrong direction. Yeah, ongoing macro uncertainty, okay, impacting its ability to meet forward-looking growth projections. So they maybe they've reduced their guidance or something like that. Miss on the earnings, although internal trends looks promising. That's what I thought. Like, you see some good stuff here that you tend to like, right? Shares look like they are undergoing a bottoming pattern, although more evidence is needed for turning bullish. Once again, down 21% since that. Let me just check like the conclusion here. To sum up, although ADN missed the consensus earning estimate in its recent first quarter, there was some notable trends that we took from the earnings report. Business wins and awards continue to mount, and the company's liquidity position continues to improve on the balance sheet. Furthermore, strong technical buying volume in recent sessions may be pointing to a bottoming pattern, although we need to see a successful breakout above the stock's 200-day moving average to confirm the. Is this the same guy who wrote another one or what? I think the decline is just like a macro environment thing, you know, with inflation and all that going on as well. There's been a strike too. Constantly getting wins from different automotive manufacturers, especially in the EV segment, which is anticipated to gain more market share. Well, that is good though. Let's check some of the press releases. Press the wrong button. Do they have a presentation? Here they are. That was the whole presentation. All right. Oh, these are great presentations. I learned a lot. Either way, then, not gonna spend time on that. I like it. I'm not sure how much I can trust all these numbers. because it's Irish. I think I can trust them, but it puts me off a bit. I can see the growth here in some of these things. Big sale, big purchase. They have taken down the debt a bit. It is still levered though, but they have full control of the short-term debt. And then they can maybe thrive after that by spending some of these cash that they have on hand, you know. They do have some pretty big capex, but I'm not worried about anything like that in this one. This would be like, can they take another step with their growth? And you see revenue is up, so maybe they could, together with the cash here, and maybe this has turned a bit down, and the reason why you get this trading so low is like more like a macro environment thing from these highs up here, you know. And interesting to see here, if it breaks below there, okay, it can get a bit more ugly, and once again, could be worth tracking. But I'm not gonna do I'm not gonna do that. I haven't seen enough. Keep in mind, even if I don't add them to my actual tracker sheet, I put them into my database here, and I can they show up in my daily mover sheet and stuff like that. So I can see that I remember that I've done research on them usually, you know. Might not remember all the details, but the more I do, the more familiar I get with certain tickers. So Max is saying here, what is total meaning in your fundamental sheet? I'm building also a sheet, and I see that the sheet can really speed up when I do only a few but big searches. Do you experience the same? Yes, absolutely. I have a pretty decent computer though, so I can tell that on my last computer I had no chance to have a sheet like this. So a good computer is necessary. But to limit the calls, it's also what you kind of have to do, and where you have to improve on the sheet every month max. And that's that has been the main focus for me in the last year or so in terms of the sheets, to improve the performance. And I think that's where Y sheets can be great, because of the screener functions. You only have to update it once, and then you can pull things in and stuff like that. I think it's an easy way to do it. But this total ratio is pretty much total assets over total liabilities, and then you get a number. It just tells you something about how they can, manage debt. I'm paying little attention to it because I have the numbers here. To be honest, I don't pay too much attention to anything of these. I do, but not a lot in the fundamental sheet. These are more for screening and pull things into the sheet just to be efficient. So I don't pull in random things that I can quickly see doesn't look good on any of these metrics. So that's what I'm doing in the daily movers and stuff like that. But here, when I have them in the fundamentals, they've kind of passed that filter already. So I'm not paying too much attention to these over here, but I think it's good to have them, just to have them. But that just tells you something about the depth, Max. Lol, great presentation. I learned a lot. Yeah. It was like one side presentation with the company logo. So a nice presentation, I think. Okay, moving on. PTLO. Portillo's, together with its subsidiaries, engages in the ownership and operation of fast, casual, and quick service restaurants in the United States. The company offers Chicago-style hot dogs and sausages. I'm very hungry. Italian beef sandwiches, char-grilled burgers, chopped salads, crinkle-cut French fries, homemade chocolate cakes, and chocolate cake shakes. As of March 2022, it operated in 70 locations across 9 states. The company also offers its product through its website. Portillo's was founded in 1963 and is based in Oak Brook, Illinois. So a restaurant. Again, close to the 52-week low. At the 52-week high was at 24. Now it's like around 12. So it has traded substantially higher in this year. There has been some dilution. Talk about more normal dilution than in BNED, but still a dilution here, or a dilution here. And I don't see that they did it to handle any debt or anything. They have even taken on debt, but maybe some acquisitions or something. I don't really understand it right now. They probably just raised cash to. You see, the capex here was a lot higher actually. So maybe just to operate. Margins down. Book value $6 almost. Positive operating cash flow, but negative free cash flow. Look at this capex. It was positive free cash flow last year. Hefty dividend though. 5.51 per share. What is that? What is that? I need to check it. That was a big one. Yeah, here's the offering. I'm not sure if I'm gonna bother to scroll all the way, but that was a big dividend. They seem to have a history of beating estimates though, so I guess that's something. And I saw here that they talked about the offering and you had a lot of comments. Fell for the story and have been burned a few times by this company's share offerings. At least this time I saw the news early on and got out of 14.75 with a gain. I doubt I would ever invest again, but if I did, I would wait for the stock to crater and then sell before the earnings. This is only a trading stock. Alright, so maybe even with the earnings, it keeps falling. So a bit of a mix, a bit of a mixed reception here. Of course, current shareholders are probably always annoyed when there's a dilution. But I mean, if it can fix the company and you're not getting diluted like it was in BNED, I can live with it. You know, if I believe in a thesis for the company, I'm not saying I do that here, but I can understand why you have these mixed views in the comments here. But I need to check who owns this. Berkshire Partners. That's not Buffett. I know his company has a different name, but is this part of it or? I don't think so, right? Oh, I've checked them before. Berkshire was founded in the mid 1980s and our first 2 decades focused solely on investing. Yeah. Where are you, Buffett? No Buffett here, right? Yeah, I guess it's not. Them. But they own a lot though. They own 16%. And then these people own 15%. So you have a couple of big owners here. Delicious food taste evaluation. Okay, this is from March 2022. These are very old comments. I mean, not comments, but articles. Oh no, sorry. This is from 22nd of March this year, probably then. Yeah. I got confused. Okay, Berkshire's ownership stake is actually 30%. I apologize for the error. How do you get 30% ownership? There's been a dilution, so he thought. I think he thought he was wrong on the ownership, and then in the end he was not wrong anyways. Double bottom on the 6-month chart. I should have bought that dip today. 1227. Oh well. 1227. Below that now. This is gonna be like a story of growth, right? If they can continue to grow and get out new restaurants. And look at the cash though, 4 million. So they don't have. Maybe that's what they have done to get the cash here. Yeah, that's probably right. And they've spent a lot on capex too. So if they can turn this around and start to generate more cash, but they would have to use money to grow, I guess, with the restaurants and stuff like that. I'm very hungry. Oh, looks cool. They compare they compare to these big chains. Direct shipping. They do a lot of comparison in this. This was on a like a conference, I think. They had this presentation. Here we are with the restaurants. States with Portillo's restaurants. Number of Portillo's restaurants today. Okay, so this is number of the restaurants they have. Portillo's currently under construction. They are expanding. States Portillo's is actually seeking to enter. So, all right. So it seems like they have focus on building out new restaurants, which is going to be important for them to, to improve their numbers here. Then of course they don't really have the cash here, but maybe that has changed with that offering. I'm not sure if my numbers are old or if we can find some updates here. Like 13 million, a bit more, but that's not a lot. And when is that debt due? I guess a lot of it is leases, right? $2028. So they have good time on that. .5% interest rate. April 14. Oh, I think they have. Well, they need to deliver, but they have time to do that and to fix or pay down all his debt. What was this guy writing about him? Theo has a long runway to keep expanding its restaurant base for the foreseeable future, aiming to reach 900 locations domestically. Okay, so that's ambitious though. Company is at the beginning stage of expanding its operating and net income margins. The Restaurants of the Future concept will allow the company to expand and operate more efficiently going forward. Assuming a conservative future multiple while simultaneously using low end of management long-term guidance, PTLO stock remains undervalued. Per the latest 10K, Portillo's believe they have the opportunity to expand to more than 900 locations domestically. With this opportunity in mind, Portillo's should be able to expand their restaurants base by 12 to 15% for a very long time into the future before hitting this mark. If Portillo's achieves the low end of their guidance through fiscal year 2028, which I believe is very achievable, the company should have around 146 locations by the end of the fiscal year. This would be an expansion of 74%. Portillo's is currently focusing its expansion into the Sunbelt region, including Florida, Texas, and Arizona. We saw that in the presentation. The one thing all these states have in common is an influx in population growth. As mentioned earlier, the company has a high AUV for the fast casual industry. In the Sunbelt region, the company's AUV is lower than the company's total average and stands at 6.8 million. However, I believe that long term, these locations' AUV should increase nicely as the company gains awareness and the population in these states continues to grow. So they have some nice growth here. But let's check the risk. It's like, I'm thinking then if they have guided so ambitiously, if they start to miss those targets, that can be a risk. And also, they need the money. They're gonna need the money to expand that aggressively. So you might see some more dilution here, you know. But keep in mind the sheet take that into consideration though, and looks at the depth and everything. The two main risk factors. The first risk is the risk of inflation coming back. Yeah, also inflation, but that's a risk for everything. Second risk that investors money is that there is a potential that management doesn't meet its long-term guide. Yeah, exactly. For 12, yeah. I don't expect the company to miss on its restaurant's expansion guide going forward, but it's something that investors should closely monitor going forward because I believe the key driver Portillo's future valuation to be highly dependent on its ability to expand its restaurant base. yeah, so they need to keep that growth and continue to open restaurants. But okay, a bit interesting. In my opinion, they don't suffer right now with the debt, even though it shows up a levered. I think they have control. The short term with the cash there, but it was a little bit more, right? But they did have a revolver that they could draw money from, I think. Um, and I forgot to see how much of that debt is leases. I assume a lot of it is. Here, that was not too much. But this one is a lot. So that's not a problem, and the debt I think will be fine. But they need to show us that they can grow. And look at the revenue is a bit up, but so is debt. So is the offering here, you know. But the restaurants seem to be popular, and that food looks delicious. And so far, it seems, at least to me, that management are saying that they are going to grow and that they are hitting those marks, but they need to continue to deliver on that for this to be interesting. And I think it does trade cheap here. We didn't check the chart, did we? You know, historically low, even though you have limited data here in this chart here. But I need it way more cheap to be interested. Look at the cash generation. It's not a lot, and this is going to be a growth thing. So I assume that it will take some time before you see this start to be really interesting. High market cap already. So yeah, no, I like stuff around this, and if they can continue to grow and keep the restaurants, I can see the potential here, but right now it's not for my tracker sheet, I think. Continue to grow and keep the restaurants, I can see the potential here, but right now it's not for my tracker sheet. So let's move on then to OIS. This is in the oil and gas sector. 543 trades close to 52-week low. Low ownership though, insiders. 350 market cap, generate 782 in the last revenue. Capex has gone up a little bit, but it's not too much compared to all other numbers here. They have 40 million in excess cash, which covered their short-term debt, and they don't have so much long-term debt even. It does show up as safe actually. And let me have a look at the margins here. Improved a bit last year, so that's good. These, keep in mind, these are 3-year averages. But also up there, you know. Book value 11 and 7, tangible book 763, so it's below book value. And it is operating cash flow and free cash flow positive. So I like that, but it's not a big number. But almost a buck in operating cash flow though, and it does trade at 550 almost. So it's not nothing, you know. It's kind of good. I like it. 41 cents in free cash flow, no dividend, 20 cents in earnings, negative on an average, 3-year average, and you can see the pandemic was a terrible year for them in terms of that. Now they had a big acquisition here. And you don't see a lot of growth since then. Actually, you see the opposite. Share count is up, revenue is down, book value is down, cash generation is down. It has traded terribly since then. But keep in mind, it had the pandemic year was here in the middle of that, you know. Let's just read a little bit here. That was a lot. Just oil, right? Was around $2 after the pandemic, and top here is like 10.50. Maybe now you can like kind of say that it's touching on some support level or something like that, but look at this volume on the way up here. That is recently too, went from 5 to 7 almost. Not the biggest price action, but something. Who owns this? Very few insiders. Deutsche Bank Max is involved. Oh, Max, I gotta sleep now. Wish you the best. Thank you for your streaming. Thank you for tuning in, Max. Really appreciate that you tune in so often and ask questions and all that. Really appreciate that. So thank you, and have a nice sleep. And we will hopefully we can see you on Saturday. And if we can get Guillermo, the founder of Y Sheets, involved for Saturday streams, I will post a tweet about it tomorrow. So you will know in advance, so you can tune in live if you have the possibility, and maybe ask him some questions about Y Sheets. So I think that would be cool. So okay, good night, Max. I hope you enjoy your sleep and have a good day tomorrow and a nice weekend when that time comes. Thanks for tuning in. I kind of like this though. They do have positive cash generation and trade well below book, you know. What are people saying on Seeking? Also improve margins. Since the pandemic, up a bit in revenue, but also in share count. And you see that they have slowly, like, it's a pretty big dilution in those years, just little by little. They had a big acquisition here, like we talked about, and the earnings looks pretty terrible actually. Oil States International will turn around steadily. So this guy writes a lot about oil companies. I've seen him before. Expects revenue and cash flow growth in 2024 due to the commercialization of new technologies and the recovery of natural gas prices. Company's book-to-bill ratio deteriorated in Q4, but improved cash flows and low leverage should boost investor confidence. OIS's stock is reasonable value compared to its peers, and I maintain my buy rating based on growth and profitability prospects. I expect OIS new product introductions like offshore managed pressure drilling system, active hub digital platform for remote well site monitoring to perform well. Increased commercialization of new technologies will strengthen revenues and cash flows in 2024. It has undertaken facility restructuring to reduce costs, including consolidating the Houston facility and relocating its Asian manufacturing and service operations. The company offshore manufactured product segment outlook brightened following increased backlog levels. However, a lower book-to-bill ratio indicates a lack of revenue visibility in 2024. Also, the depression in natural gas prices can make returns from investment challenging, so the stock underperformed on Vector's oil service ETF. in the past year. Although its cash flows improved in full year 2023, a higher planned capex can lower its free cash flow in full year 2024. Given the reasonable valuation multiples, I think investors should hold it with an expectation of high returns in the medium term. Yeah, okay. We saw that capex was up, right? We also saw that the cash flow started to be positive. And he's talking a lot about book value here. So he's just pointing out the stuff we saw. I need it cheaper still. I need this cheaper. And by looking at the chart, you know, if it drops down here to 350 or even 250, it's interesting for me. But right now it's a bit too cheap. But I do think I will add it to my tracker. And I like a lot of these oil companies as well. Was it equipment and service? I would say like 3, just to catch my eye. I actually think this can be, if it goes to 3, I have a high conviction in this one. Decent fundamentals. They seem to have control of their debt. What else did we see? Positive operating cash flow and free cash flow. It was positive this year too, right? Yeah. And currently trades well below book value. Did we see the owners in this one? We did, right? There was no. Yeah, we did. So nothing on the owner side. Still a bit expensive at these levels. Pay attention to a substantial drop in price. Insider buys at low levels. And development on the growth story. Just gonna add it with that. I have high conviction if it drops down, but around here maybe not so interested. Needs to get a drop down towards $3, I think. Even lower. I could see this being worth, like, you know, fair value. What do you think? Like between maybe like with a little bit improvement in their numbers, maybe like 10. You can go to 10 too. This is interesting to me, I think. No investment advice though. Just doing this for Well, I have a few tickers left, but I look at my time here and it's getting a bit late, and I also see that my OBS is struggling a bit again. So I might save the rest of the tickers for Saturday's stream. I have the rest here, HOFT, AXTI, BBCP. And I think I will save them for Saturday's stream with Dane. And I will call it here, I think, and apologies again for the technical issues we've had today. And also like rough week for everyone who owned BNED. But we will bounce back and we will move forward and push forward and learn from that story. And like I said in the beginning of the video, there are some lessons here to learn from and to hopefully avoid in the future. Saying that, still interested in BNED, but a route to more certain profitability in terms of getting the investment back or even make a little bit of money needs to open up for me and be very clear before I consider to move in again on BNED. So, but yeah, I think I will end it there. Thank you for everyone who tuned in, and I will see you on Saturday together with Dane. So, and thank you to Value and Max for using the chat. And yeah, I hope we will. I hope we will see you on Saturday, and hopefully we can find some new stuff then as well. Added one to the tracker today, so I'm pretty happy with that. The rest are interesting, but not quite there yet for me. Just doing like a mental note of them. So yeah, I hope OIS will drop a bit more. Maybe then it gets a bit more interesting. But okay, for now. Take care and enjoy your night or your day wherever you are, and I see you guys on Saturday. Thanks for tagging along. Bye bye.